your local Trader Joe's. Truffle, what the hell are they? Marcona almonds. Little plug for the Trader Joe. They're freaking delicious. Especially if you eat a piece of smoked Gouda cheese with them. Oh, man. Holy crap. Well, gotta love Bitcoin. What do I always tell those over-leveraged freaking future traders? You're gonna get bit in the ass if you don't take your profit. I'm just gonna add on to my position. Bitcoin's going to the moon. Yeah, got about halfway to the moon. Pulled back to upper Earth atmosphere. So now we get to see what happens now. Yesterday, pre-market, opening bell, the traditional markets, Bitcoin just pumps its brakes off, right? Today, exact opposite. Big players over there just taking profit. They're algos, right? Don't. It's all algorithmic trading. It's what we always try to tell people. Some people deny it. Go ahead, deny it. We don't care. That's why we trade this way. That's why we use volatility, probability, and statistics, because the algorithms that are moving this market, that's what they're using. Why would you want to use traditional technical analysis? Doesn't make sense. Just doesn't make sense. It does to some people, but yeah, it's a cult.
It's a big cult. It's a big cult, for sure.
Can't tell somebody you're in a cult when they're in it. Once they get out, they're like, "Holy shit, I was in a cult." It's like
they don't even realize it for the most part. For the most part, they don't even realize it until it's way too late.
Yeah, until they've wrecked several accounts and they're getting divorced.
Yeah, they just it's because it's pushed upon impressionable people by people who are supposed to be carrying some weight, some measure of gravitas, some measure of authority in the world of finance, and it's just a big scam. It's just a horrible, horrible scam.
Yeah. Very scammy. Very scammy.
We're here, and we're here to make people's trading lives better.
Yep.
By trading the right way.
100%. So we can take a quick look at the charts here. I got a projection going from 28K low, Laplace distribution. We got a projection going from the 41K low, Laplace distribution. Starting to get close to the end of this projection, isn't it? Yeah, I'll have to bump that step line up a little bit, which is fine. Fine. That's what's great about this indicator. The more you bump it up, the farther it will project. So yeah, it's a great indicator. So let me turn these off real quick so I can, because there's nothing significant. See, we're just up here floating. We're floating above the 95.4 Laplace distribution on the longer projection, and we're floating up above the 95.4% Laplace distribution on this shorter projection from the 41K high. Why do we use this? Look at these wicks, right? There's a reason why I get locked into a couple different projections. I mean, that they hold weight, in my opinion. They do hold weight. I'll even show you one that even holds more weight because it did actually come back and test the mean, which makes sense because a projection starts on a down move. Let me show you here real quick. Let's get the measuring tool out. And that was when we made the run up from 28K. What is that? 83 bars. 28K up to about 43 right here. We start a projection right on this down move, right? Because this is how you use these indicators. You want to start these projections at pivots in price. That's the only time that you should ever be using the word pivot when it comes to trading. There's pivots in price. When we're talking about the average price going into a new day, a new week, or a new month, those are price action volatility ranges. Okay, this is another just misconception coming from traditional technical analysis. They want to call those areas pivots. It's probably coming from us Americans, right? Because we drive on parkways and park in driveways and all the other stupid shit our language projects onto us. Just nothing makes sense, to be honest. But yeah, that's where we're at. We're in clown world. Let's back this up to 83 before I really start in. Okay. So why is this valid? Well, I'll show you why. Look at this projection, right? First, this down move, and we dropped from 43K. The bottom side of the 95.4% Laplace distribution range supports that price action, right? And so right about here, right, we start taking off. We actually go, as soon as we open this new day, this was a great day to trade. I remember this. This was a very profitable day because the first thing I noticed when that price action day opened up was the 95.4% current candle on the daily Laplace distribution range and the 95.4% projection range were right in the same area. That's a magnet for price action. The algos are just like, nah, let's go down there. We'll wreck some of these over leveraged longs that got in after this little dump, right? And they're, oh, we're going to the moon. And boom, they're wrecked. So it opens up, comes down, tests the bottom side of the 95.4 on the projection, and to the dollar tests the 95.4 on the current day candle. Then roars up and tests the bottom side of the 68.3% projection on this Laplace distribution range. Okay, we open up the new day, we get up above, right? We get up above the 68.3 right here. Tested a couple times. We have, this was the 10.5K day where we really had a nice dump. Look where it went to the dollar. It tested the mean of this projection, right? This is the distribution. It tested the mean of this distribution. Pulled back. Why did it pull back? Well, number one, it got outside the 5th standard deviation normal distribution and then ripped right back up right to about the 3rd standard deviation normal distribution. That's what's going to, or is that the 2nd? No, that is the 3rd standard deviation normal distribution. Plus, it almost closed back up above the 68.3. Open up the new day. We test some current candle distribution levels, right? Boom, boom, boom. We start to rise again. Right, the algos are like, no, we're going to push this thing down again. This time, though, we're going to go to the bottom of the 68.3. We bounce up off here again, come back, open this new day, test the 68.3 current candle Laplace distribution range, and then dump it right back down to the bottom side of the 68.3 on the projection. Another time, there's another wick, right? Open up new day, boom, it comes back down, test it again. That was the launch pad, the bottom side of the 68.3 on this projection. Okay, so I like to show that as well. The reason why I have it back here, let me change it back now to the 28K low. When I saw this squeeze happening and how it was being respected right here, I was like, yeah, there's something to this. I'm going to leave this on because at some point here, look as this is projecting out here. I mean, if we're going to get a dump again, you know, maybe we get a little relief here and it goes to the upside. But what if over the weekend or something, when these are matching up, both the 95.4s are going to be matching up. This is going to be a good area to know exactly where price action is probably going to go to. We didn't get to it yet, right? Do I think we're going to go any lower from here? There's a lot of bull div between returns and price action, right? So it's yet to be seen. You know, traditional market, the traditional investors, they had a little fun today. Their algos are playing in Bitcoin, obviously. Right after Elon Musk makes a tweet, market dumps. Right. Guy should be in jail. He's a scammer anyway. You know, anybody surrounds yourself with a lot of geniuses. I'm not saying the guy's smart, but he has surrounded himself with a lot of great people, so takes the credit for everything. Yeah, it's not like that. Let's see here. So yeah, look at the squeeze play that happened, right? We get up above the 95.4 here, and we go up, we test the bottom side of the 95.4. We go sideways, run another candle up to test the bottom side. Right here, we go up and test, close the candle. Both these 2 days wicks are down here testing the top side of this projection. Then we launched again from there up to the new all-time high, right? What was it, 67K? Beautiful. So that was a great area. Do you know how many people from this area down here just kept adding on to their futures positions, and how they're just polling their liquidation point right up behind them? I would love to see the percentage, the amount of people that got up over about 50% leverage or something, you know, 50x, 70x, shit like that, where there's no way you should ever be like that. because in a daily candle like this, liquidate your account. That's what people don't realize. This is why people get liquidated, right? They add on at tops, they add on at bottoms, they buy tops, they buy bottoms. Insanity. And you want to see something real funny? We had a little bit of this action going on today. And where are you little booger? Where is that? Binance USD pair. Hello, Charlie. So anyway, but don't worry, folks. Crypto, we got it under control. Nothing to see here. It stayed within the 99.7 Laplace distribution range, right? This wick on Binance US. It takes the Scam Wick of the Day award. Hilarious. If you want to know, 86% wick. So, how many people had orders? Just throw a Hail Mary. Yasha said it in the chat earlier. If you're on one of these spot exchanges and you got 10K laying around or something, throw a Hail Mary down here. Throw a projection from this local and throw some Hail Marys down here, because you never know. Shit like this happens. Look at this ridiculous wick. Guys, that was at a 5-minute candle too. Okay? Probably, it might have been in a 3-minute or a 1-minute. It was quick. Whoop, whoop. Fat finger. I mean, what the hell is going on? But that's also a good sign of, you know, boom, people were waiting down here to buy this move. If anybody thinks this is legit, you gotta, if this was going on in traditional markets, there'd be people in jail right now. That's why I was shocked that it was on this exchange, right? I mean, these guys are regulated. This is Binance US, not Binance. So I don't know, man. Shit like that. The problem with this kind of stuff is, though, new people coming into the cryptocurrency market, you know, people coming over from the traditional market investing, they see shit like this, man, that wrecks investor confidence, in my opinion. You don't want to see crap like that, right? Unless you're the ones doing it and you were down here 8 to 10K buying in. If you had 100K waiting down there like at 10 and you get, I think it was about a little under 80% move back up, do the math. Hello? You almost just doubled your freaking cash. It's just ridiculous. Holy crap, holy. All right, now that we showed the Scam Wick of the Day award, let's go back over onto these perps. Or actually, I like it on index, so I'm looking at higher time frames. Here's what we could do, though. Let me pop up here on a weekly real quick. Just want to get a good look here. There's this baby pulling back. This is typical, though. This really is. First off, on this weekly candle, we were making a run for the 1SD on the weekly, which is up there about 68,580. We made a strong run towards that. We were up above the 68.3% Laplace distribution range on the weekly candle. See this yellow dot right here? This yellow dot right here. That's the 68.3% Laplace distribution range. So what is that telling you? That's telling you 68.3% of the time you're going to find the Bitcoin data set in that range. This yellow dot and this yellow dot. 95.4% of the time you'll find the Bitcoin data set in this range. And then so on, 99.7% range. Okay? But it's easier to think of it as, for Bitcoin to get beyond this 68.3, there was only what percentage of a chance, right? Do the math. Do the math, right? I mean, if you're up here to 95.4, you only got a 4.6% chance to get outside of that. You only got a 0.03% chance on the weekly chart to get outside of that range. That's how this stuff works, okay? This is why it's so important to understand these percentages. And if you don't have them memorized, it doesn't take, I mean, just do it. Do it. It's nice to have just soak it into the brain cells. Let me see here. Let's go back on this weekly. Let me see how many candles that is. I'm going to move this projection right to here on the weekly from the 28K low. That is 14. Let's move this up. And Mr. 99.7 range. Let's get you in the action. We always like you. There we go. All right. In my opinion, we're making a run up here. right? We're making it now this week. Don't know. Maybe next week. But guys, we're talking $90,000 Bitcoin up in this area, right? Let's see. This will be pretty funny. Since I do have it on the weekly now from the 28K low, let's go back to the winner of the scam wick of the day. Let's check this out. Let's see where it went on the weekly. Holy shit. Okay, so anyway, didn't get as close to the 99.7 as it did on that daily, but yeah, we got beyond the 95.4 on that projection. Crazy. And I'm sure you could go, you know what? Let's have some fun. Let's see which one of these really got nailed. This is what I like to do too. So where would I put this one? Right here on this down move, 24. Dun, dun, dun. We're just playing with the projection, boss, right? This is a lot of people's favorite indicator once you learn how to use it. It's a beautiful thing. Oh, this looks like it's actually going to be pretty close to the 99.7. No. Nope. It's all good, though. It almost looks about like the daily. Okay. So anyway, let's reload this chart. Stop playing games. Let's get over to the VRE now. And like I said, on this daily, right, you can see, hold on here, boop, boop, and boop. Scale this baby correctly so we can really get a good look at this candle. Okay, there we go. Boom. So down here, this is this blue dot's a second standard deviation normal distribution. This yellow dot's a 95.4% Laplace distribution. Okay, you can see, I mean, did we get a wick by him? Yeah, but there's only a 4.6% chance this daily candle is going to close outside these ranges. So it's pulling back. And like I always say, Bitcoin never shocks me. Remember, there's a 68.3% chance by the end of the day, this thing comes back up inside the first standard deviation range, or the 68.3 Laplace distribution range. So keep that in mind. Now, to get inside the Laplace, that's a hell of a move. The daily opened up right above it, but I could damn sure see it coming up maybe inside the first standard deviation normal distribution. It's about 64.7 right now, a couple K. Hell, this thing can climb just as fast as it drops, so don't get too excited, right? If you were in a short, hopefully you took profit. I saw a lot of shorts falling off, so that's good. At least people are taking some profit. Usually when you get down here around the second standard deviation, this is when these knuckleheads start putting shorts on. Oh, I missed a move, but oh my God, this thing's going to keep going down. I'm going to short down here. Why would you short a 95.4% distribution range? Does that make any sense at all? No, it doesn't at all. The odds are way against you, way against you. And here's the VRE, right? We open the day, we immediately come down. The VRE is the volatility range estimator, okay? So this is going to be volatility ranges of price action. And then there are distribution levels, normal distribution and Laplace distribution levels on here, 4-hour and daily when it comes to the distribution. This solid green line here, this is the S1. This is the first support level of the daily volatility range that's right here. Wicked right to it, right? Bounce from it. So for all you out there that just deny what we do at Alpha Trading, go back to your traditional TA, right? We can't save everybody from the cult. Thing pulls back up. Look where we close most of these freaking candles going across here. This blue cross line, that's the first standard deviation normal distribution on the daily to the downside. So we get a short little bounce there. Then we go down and test that S1 again, and we get a nice relief bounce there up to about 66.7. Nice little move. We drop back down, test that S1 again, bounce again. Now, this white cross line right here, that's the 95.4% daily Laplace distribution range. Look where all these 15-minute candles are closing, right? Well, there's only a 4.6% chance that you're going to get the daily close beyond this. The blue cross line is the second standard deviation normal distribution. Usually these two levels are going to be real close together, right? But Here is the 68.3% Laplace distribution range on the daily. It's a lot tighter, and if you look at the distribution model, if somebody has it handy, they can post it in the stream chat. You can get a look why. Here's the bottom side, first standard deviation normal distribution, and there's the top side. Look how much bigger the first standard deviation range is. They're both 68.3%. Excuse me. But normal distribution, right, the bell curve, it's going to be bigger. It's going to be bigger. But the second standard deviation normal distribution and the 95.4% Laplace distribution range are always right around each other. It's when you get to the third standard deviation too. So here's third standard deviation normal distribution. Look at the 95.4 Laplace distribution, or the 99.7 Laplace distribution range. It is out here by the fourth standard deviation normal distribution. That's because the Laplace distribution level has got a real tight, 68.3 range and a real wide 99.7. Why do we use Laplace distribution? Because you want to use this distribution model in assets like cryptocurrency because they're so volatile. You don't see this shit in traditional markets. You just don't. You don't see volatile moves like this, right? I mean, there's a much larger market cap. So, yeah, you got to keep that in mind. That's why we use Laplace, and that's why a lot of the algos that trade this have started using Laplace distribution in the cryptocurrency market. They were using normal distribution. Damn it. They still do to some effect, but if you go back, if you do have this chart, go back and just look how these Laplace distribution ranges just nail. Especially if you get a nice ranging day in between the 68.3, this thing can just bounce around in here. And if you're paying attention to the other chart, all kinds of good volatility trades, all right? You never forget the standard deviation of returns is volatility. There we go. Had an almond in my freaking throat or something. So that being said, what creates everything in these markets? Volatility does. Right? I can't say enough. That's why when people call like the average price action going into the next day, week, or month a pivot, it's like, no, it's a volatility range. Volatility is what's creating these candles. Volatility is what creates the average price, right? Not some just, good Lord. Pivots are pivots. I mean, right? Pivots in price. So once you get out of the cult and you get all that straight, your life will change, right? You'll figure out that what you've been getting taught over in that realm has been incorrect the whole time. They don't want people to know this stuff. They don't want people to know that volatility is creating all of this. That's the only thing that's creating all this price action. Volatility, volatility, volatility. That's why when you go over onto my main chart, this is all volatility right here. Right? Here's our new indicator. We're working the bugs out of it. It's the alpha volatility z-score. This is the z-score of historical volatility. And it's very powerful. It works well with everything else. I'm probably going to move my entropy indicator over here and move the AVZ over here where it belongs with its kin, the AVR, right? Or alpha volatility radar. This is where we got the alpha volatility percentage. We got the alpha volatility grade. What's alpha volatility grade? Alpha volatility grade is a combination of implied volatility and historical volatility. So this fits in real well because this is the z-score of historical volatility. And it's a beautiful thing. Works the same way. Look how historical volatility right here starts to expand. It's positively correlated, right? Look at the price action. Straight up. Right over. Here's a good example right here, okay? Volatility starts to contract. What's the correlation? It's negative. What happens when you have volatility contraction and negative correlation? Walk, 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 walk. You walk right up, right? And then what usually happens when you are contracting negatively correlated? It ebb and flows into expansion and positive correlation into a pump. This is a prime example of it. Contraction, negatively correlated. Goes sideways for a little bit, then expands, positively correlated. Walk up into a pump. What's the difference? The pump is going to be, you're going to have a couple massive, and this is on the 90-minute. You're going to have a couple massive 90-minute candles, if not just one. The walk-up's going to have several over time, all right? So yeah, this is a great indicator. I know everybody's foaming at the mouth. Trust. Look what's going on right now in the 90-minute though, right? The volatility, the historical volatility starting to contract, and it's heading back down in the negative correlation. So we could see the rest of the day here a walk up, right? But this right here, this is the reverse wave trend, which we all love, right? I mean, it's great. We are below it right now, but we've been below before, right? Where we more want to go over here on the 4 hour. You want, especially the settings I have my reverse wave trend on, it is a great indicator if you set it up right, right? And my settings work really well. Look at this bounce off of it right here, right? Boom, boom. We launch again. We almost got to it. I was eyeballing this bad boy. You think you don't think I was chomping at the bit right here? It got real close too, right? What's it at? 61.6. We got down to 62. I'm just like, you son of a bitch. That could have possibly been a great entry down there. It definitely would have been, because you could have got a great of the what did we get up to again? Let me go back over here when we got that low. So it bounced down there at 62. We're talking about a $1,700 quick little scalperoo there in an hour. Zip, 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 zip. Take profit. Good stuff. Back over to the laser wolf chart and the 4 hour right now. The variance is starting to roll over on the Wolfsbane. It's negatively correlated. So if that variance starts coming down, the historical volatility is already starting to roll over and come down. They're both negatively correlated. And on top of it, all you divergence students out there, right? We're building some hidden bull, right? The returns oscillator is already up. We got to get a nice 4 hour close here. Let's see here. I'll tell you what I really want. I want a nice little last 4 hour candle. Let's get this thing back up inside the first standard deviation normal distribution. That's probably going to lock in that hidden bull, and then this thing's going to run tomorrow. What does Bitcoin do? It wrecks the shit out of people, right? We all know that are here. There's people over in traditional technical analysis land. All the comments you're reading, this is manipulation. This is whale manipulation. I can't believe this shit. This is crazy. Bitcoin's supposed to go this way. And it's just like, we're over here just laughing our ass off going, trade the volatility. That's what we're doing, right? Come on. Come on. So that's what I'm looking for. Even above this S1, right? Even above this S1 would be nice. But that's what I'm trying. I'm looking for. I'm looking for this hidden bull. And there is actually, it's not as strong as over there, but it is there. There's another stab, right? It's more on the returns oscillator. There's no, yes there is, holy crap, holy. Same thing on the Z-score, right? There's hidden bull on the Z-score as well. Let's see here. And DLP, same thing. I mean, I don't have to look. And look what's going on the low-length AVR. It is positively correlated, expanding again. The other two are contracting, negatively correlated, right? The entropy, we were having a good time right here. We had that nice pump, right? Boom. But then the entropy starts to go back into randomness. When you see this turn yellow, pay attention. Look at the other indicators. And if you didn't notice, this is why I used the 4-hour and the 90-minute. Look what the 90-minute did on the 636 length and the 981. What have I talked about for years? When you see volatility drop off a freaking cliff like this and start flashing, we're talking up here, it dropped from 100% off a cliff, next candle, down to literally like a 2. That is a freaking there should be a siren going off in your head that something's about to happen. And in my opinion, right, this was great right here. What a fake out back up to whatever it was, 66.7. Then they dumped it right when the entropy got yellow again, right when it was totally random, right? Oh my goodness. And then you started getting these the red columns up on top. That's the entropy price percentile. That's the R squared. The R squared is the coefficient of determination. So this is going to tell you the correlation between entropy and price action. And we have this function in this indicator where you can turn the candles, right? The same color as the bars. The same color as the entropy will be the candles. This is all trend right here. This is all random. Got a little bit of trend up here, random. Random. A little trend on that 90-minute candle, but all this was just one big trend. This right now, all random. We had one little trendy 90-minute candle right there. So yeah, this is going to be interesting to see how this baby plays out. Let me back this up. Get rid of my little green lines here. And also on the 12-hour. This did not erase. Why aren't you erasing? Oh, because I'm not on the side. There we go. It's building as well, right? We're building as well from right here. There's a lower low right now on the returns oscillator. Now, it hasn't turned back up, right? And we do not have a low on the 12-hour candles yet. But there is definitely hidden bull building on the 12-hour. And everybody knows that it's volatility that creates everything, and it's divergence between price action and returns that will let you know when the market's getting ready to either make a change in the trend or a continuation of the trend. Right? The regular divergences tell you there's a trend change coming. The continuation divergence tells you when there's going to be a continuation move. So yeah, we all got to pay attention to that. Here's a good example right here. It wasn't too extreme on price action, but it was a lower low, right? Was it actually, what am I looking at here? That is not a good example. Let me see something. Where was that spot I was talking about? Here it is right here. So when we go sideways right here after this little trend to the top side, and it was trend, look at the first move, right? It creates, you get a higher low right here, right? Well, there's a lower low on the returns oscillator, right? 2 spots. And then boom, we get another continuation of that trend to the top side. It's starting on the 12-hour again. I don't know about the daily. Let's see if the daily's got a, probably not. Actually, eat my words. Yes, daily too, right? Daily too from this point right here up to there, right? So we got 2 spots too. I don't really like that because there was not a bearish candle in here, right? So from back here, from this low right here, there's definitely some hidden bull building. That's what everybody, look what's going on with the historical volatility, right? So look right here. This is a great example. I'm going to put a vertical here. Where are you, vertical? Oh my goodness. Okay, right when that historical volatility starts heading to the downside, it was still negatively correlated, right? It was still negatively correlated. And we get 2 more daily candles at the top side. Right here, at the top, is where it started sloping back up, positively correlated, while there was still contraction going on. So boom, we get a daily candle to the downside. Because the contraction happened when it was heading up into positive correlation, right? So you're going to get a walk down. And, you know, I love talking about, yeah, it was a $5,000 walk down. That's what you get. Crazy, right? If you guys think this is anything, wait till Bitcoin's over $100,000. If you think $5,000, $7,000, $8,000, $10,000 moves are freaking teeth knocking out kind of action, wait until we get up there. We're gonna have like $20,000, $30,000 swings. It's gonna just be wrecking people all over the place. That's why I always say, you know, there's all kinds of people talking about investing and they don't know how to invest. You got to understand Bitcoin dominance, right? How to read Bitcoin dominance. When are the alts going to have a relief rally? Yesterday, right? The alts had a relief rally. Bitcoin dominance was coming down, so the alts were pumping, right? Right now, though, you know who's holding really strong? Pull over here. It was earlier with Solana. Yeah, it's up 6.3% right now. Back at, I mean, it's almost at its high where it was yesterday. So Solana's holding really well. Also, Thorchain, Rune's up what? 14.9%. There's several little gaming and gaming platform tokens that have been pumping here recently. So interesting. Cardano, yeah, Cardano does what Cardano does right now, right? We'll see what happens, but from what I was seeing on the correlation chart, Cardano's just waiting, and when BTC really takes off, but in all sincerity, I mean, Cardano's holding its own too. It's at $2.16, and it was just getting its positive correlation with Bitcoin back on the daily chart, so that's important. Where are we? Back up almost at 63. Yeah, we need to. Right now, look at this. We're just ranging in between this last 4-hour candle, 68.3% Laplace distribution range. Right? That's what these thin white lines are right here. So it'd be nice. Let's get a move up to the 95.4, right? 60, a little over 64, 150. Close up above the daily S1. That'd be a good start. That would be a good start. It's tried a couple times. Traditional markets were still open. Those algos were kept hammering this thing down. People taking profit, right? And that's what happened here, guys. We hit $67,000. All this is profit taking. You know, these institutions and shit are going, I'm holding, never selling. You don't think these guys take profit? Hell yeah, they do. And a lot of them now, they hold a lot of Bitcoin. This is why the bigger the crypto market cap gets, the better. Right? We get up around $5 trillion, $10 trillion market cap in the crypto space. It's going to be a lot more fluid. You're not going to see the craziness. But on the way up, right, at 100K, stuff like that, you're going to be seeing some major swings. People are going to take a lot of profit because that is, just think about it. So say you got 10,000 Bitcoins and you dump those things on the market. You're going to dump it. You know where the price is going to. You're down there waiting. You're just going to buy back in. Then the market's going to go right back up. So these guys, and what's that called? I mean, that's a little old-fashioned wash trading, right? You're going to make a shitload of profit. There's a lot of illegal shit going on in crypto that would get you in in some white-collar crime big time in the traditional markets. You'll be playing tennis somewhere with Martha Stewart. Let's see. Back over here. So yeah, I'm waiting for the new day. Daily still looks healthy. And we got this bit, right? We got a bull wick on top of this daily candle, and we got a bear wick on this daily candle. Why? Well, we got the low length. It's expanding, positively correlated now. You got the 981, which everybody knows. It's a powerful read. It's expanding, negatively correlated. But then you got the 2400 is contracting, negatively correlated. Right? So now I'm telling you right now, if this was positively correlating and expanding, you'd see a massive bull wick on the bottom side. But because it's just a walk up, this is creating a lot of power here, right, to bring it down. So yeah, that's what we got happening on the volatility. I do like this on the daily because it's heading back up in a positive correlation. We come into this new day and historical volatility pops. We're gonna pump like crazy. And the Z-score was showing this bear div, right? The Z-score was showing bear div. So was the returns oscillator, right? But we were losing the histogram here. The pink lines is telling you that it's decreasing, right? So the read on here isn't as strong. That's why, I mean, if this was blue, right? If we had a blue histogram and the correlation between the returns and price action was building, this could have got real ugly, right? We could have dropped down into the mid 50s or something and just shocked the shit out of people. Let me go over to the stream chat before I talk it away. Let's see. Okay. Yeah, Andy. Smoke Gouda. Good stuff. Nice. Sayron, there's all kinds of different stuff. Like what in the settings? I mean, there's not too much to change, right? I don't have my drift on. I don't have drift on. Let me reset this. It's probably all it is. It's going to look the same. If you turn off your drift, right? And I'm always on a 30 length. I'm always on a 30 length. So I don't know. You got it starting in the same spot. You know, look, sample size 30. I mean, that's pretty much all it's going to be, and I have the drift turned off. If you have sample size 30 and you're on Laplace distribution and the drift's off, it should look identical. But I've seen people do some pretty wild stuff. There's a lot of user error sometimes going on. But yeah, just maybe you have it on a sample of 365 or something. Finding it's going to do. Sitting like a turd. Yeah, and these guys, they're trying to keep this price action down till the end of the day. It's going to be funny to see what happens. What time is it? 2:40. DOP was showing that little bit of bear div too. To beat the bear div. So Bitcoin, what you gonna do? What you gonna do? We needed a healthy pullback. The thing ran up. People took some profits. It's all good. That's why the Bitcoin dominance dropped. What are people doing? They take their profits, they slam them into altcoins. That's how the whole Bitcoin dominance thing works. But how do you know that's happening? You got to watch the dominance, especially like on watch it on a 4-hour. Mm-hmm. And we got some new people. I don't think any of them are in the chat right now, but yeah, got a few new people, which is good. Anybody got any questions in the Discord? Yeah, it was probably your starting point. Yeah, say around. It's always just little things. Always just little things. Just reading the chat there. Okay. So I always say around typing. I know somebody else has got a question. But yeah, most of them are OGs anyway. They're going, yeah, we've heard all this before. Look like Crown over here, don't I? Drinking all my water. Would that be fun to see me and him going at it? TA and volatility trading? That'd be awesome. That'd be awesome. Because we are. I mean, I consider him a friend. We never had a falling out. We see the market differently. We always have. That's what led to our separation, right? But I try not to do that with people unless they're real assholes, like you know who. That guy can go jump off a 16th floor condo mansion balcony for all I care. Let's see here. The old condo mansion. You watching, Superfan? I know you're out there. You got nothing better to do because you're not allowed on TradingView. Poor soul. You're so tortured, my friend. But it's okay. Everybody is. Some just hide it better than others. You wear it on your sleeve, you maniac. Let me see. Saron's typing a paragraph. I gotta get ready for this. He's putting me to the test. Putting me to the test. Look at this daily too. Oh, that was a good little read right there. All right, if you blow this indicator up, you'll see the slope. Look when this historical volatility took off. We were already sloping negative, right? So you're just waiting for what? That 10.5K day? Yeah, yeah. The old Trump Tower. I was in Chicago for that for the 3 Grateful Dead shows, right? Where they had Trey Anastasio, whatever, from Fish playing guitar. And that's where we stayed. Freaking, I'll tell you what, I thought I had expensive lunches before. Go eat out on the terrace, go have lunch out there where a bottle of beer was like, I don't even know, it was stupid, $26. Something ridiculous. There was 8 of us, and our bill was like a couple $1,000s. And I was like, holy shit, go Trump. What the fuck, bro? Oh yeah, making that money. Making that cash. Regular bids and higher time frames. Right, you always want to start on the low time frames. Yeah, I'm probably not coming up to Chicago. unless I drive my tank. And I'll drive through the south side and fucking nuke that place. Let's see here. But we can definitely come to the property. And eat a bag of mushrooms. You hear that? Oh, I didn't hear that. What the hell's this guy talking about? Let's see. Questions. Yep, say around start on low time frames. Because they're going to ripple up through. At least that's when the move will start, right? No low time frames. Speaking of low time frames, let's go down to the 15-minute. This will be a shit show. Yeah, look at all this noise going on right now. Look at all the noise. Fun. Yeah, like right now, see the historical volatility? Totally contracted. Almost totally contracted. And it's positively correlated, these last 3 candles. So it's leaking back out again. But that's usually, well, let's see, we're going to get this historical volatility, going to go into a pump here, and it's positively correlated, and we move right back up. All right, here's a good 15-minute candle right here. Everything will span, right? Start having an outlier negatively correlated. Where that outlier, it started the candle before. Historical volatility takes off, negatively correlated. Fantastic. Well, it didn't start with that, right? I mean, it started on lower time frames. I mean, yeah, there was bear div coming into the day, right? There was definitely bear div, but the move didn't start there. Because look. Hell, look. Here was the start of the day. Hell, it pulled back, and then it launched right back up, almost to the all-time high. Right? It all starts on the low time frames. If it started on the daily, okay, we're getting hammered right now, you would see this point opening up on the daily. This wouldn't have stopped, right? Stretch that out. It'd be down here by this weekly, by the top of the weekly at 60.6, probably. Would be way on down there. Just popped on, buddy. Well, yeah, there was definitely bear div on the daily. 100%. 100%. You can see it right here. I mean, I don't have my divergence thing turned off. I like to read it myself, right? But, I mean, you got a point way back here, too. Right? But then go, let me see something. Dun, dun, dun. Let me see. 90-minute? No. Is it on? There. Find something here. So was that the run back up there to 66? Yeah. Look at this whole run up, right? Look at the returns oscillator all the way to the top. So on the 15 minute was bear div, and it started the whole run down. So we move back up, right? We get this high here, more bear div, boom. We get another little quick run up, another lower high, more bear div. See what I'm saying? It's been walking it down the whole time. We still don't have a higher high. But at this point right here, this doesn't matter over here. But all through here, right? These are all lower highs. It really started on the 15 minute. This is how you know. I mean, this is a good way to, because look at this move, right? So we're up here on this low and this low. There was bear div. So we get that jump back up to whatever, 60, would that go back up to 65.7? Yeah. Divergence is an art. Yeah, you just got to read it through all the time frames. It depends on what you're doing. What are you trying to do? If you're scalping the low time frames, you don't need to worry about what you're reading on the now. The divergence trend is definitely to the downside, but what are you going to do? You're going to take your profit. You're not just going to sit in a short, right? So you need to just trade the low time frame down here, 15 and 5 minutes, and know when this thing's going to bounce. Have these little bounces. I haven't traded at all today. It's a damn shame. Where's this thing going? Trying to leak down here. Is what you don't want. You don't want the daily closing down below this at all. You never want the daily to close below the 95.4 Laplace and the second standard deviation. It's just like, God, Bitcoin, what are you doing? We ran up to 67. Now what are you going to do? You're going to just bleed out? Sometimes I do. Sometimes I'll scalp all day. But it's like, I live my life too, man, right? I mean, I'll go in little spurts where I'll have a bunch of trades in a few days and then I won't trade at all for a week. Plus, what is this, 15? Yeah. I mean, historical volatility is almost all the way contracted. I mean, you're seeing it on the 636 on the percentage, right? In the 980 babies are high. Shit, where's Bitcoin going? But at some point, right, what's going to happen? This thing's going to find a freaking little local bottom and it's just going to rip again. You know it. Bitcoin's famous for doing this shit. I'm sure there's already people, oh, that was the high. Now we're going into a bear market. It's like, Jesus, people. Y'all need help. Y'all need help. We go over here. Let's actually throw this on index. I did see the weekly was starting to leak a little bit. Oh, there's a fun time. Bitcoin US dollar. Woohoo! Yeah, the index. What did I get down to? Yeah, a little under 2. So weekly. Yeah, I mean, this thing's still having an outlier, positively correlated. The returns are turning down a little bit. Yeah, with a little bit of bull divs. We're gonna have to see because the Z-score is still charging. Then again, I need to see a weekly close, right? That's coming up soon. I want to see what transpires on this weekly. I mean, look at the DLP. It's this week is still building a bigger candle to the top side, right? The log returns. And it's positively correlated to historical volatility. We just need volatility expansion, right? That's what I'm saying up here. We need volatility expansion on the weekly. The reason why this thing's bleeding out is because it's contracting positively correlated. It's flat positively correlated. Right here, it's actually flat negatively correlated. But these two are gonna, that's what you're seeing. You're seeing a doji. Right? But more of a bear wick because these two are both saying down. This one's saying walk up. So you got a little bit more of a bear wick than a bull wick. Nice, good, Saron. That's what it's all about, learning, right, man? Heck, yeah. And spreading that knowledge when new people come in. Like Ascariot, he wrote a book up in the chat earlier today. I was like, yeah, go, bro. That just helps us, trust me. That just helps us. When I see stuff like that, I just smile. And here's the great thing. Nah, dude, you write a book. I don't care. Write a book. The people that I brought in 3 people, and 2 of them didn't even have TradingView accounts, which I just love. So what's that mean? Well, number one, they haven't traded any traditional technical analysis at all. They're like blank sheets of paper, right? We can just fill their mind full of volatility, probability, and statistics. We don't have to get through all the sludge of traditional technical analysis like most people have to go through, right? And you can see it. I know who still struggles and I know who don't just by the way they post in the Discord. I immediately know. I'm just like, you need to quit looking at traditional TA. I don't know what you're looking at, but you're looking at something. You need to just focus on volatility, probability, and statistics, especially if you have all these indicators. It's a learning curve, right? It takes not even a short amount of time. It'll take a while to figure this stuff out. I'm pretty sure that's some stuff that Ascari was talking about in his post. I mean, just be patient. Be patient with what you're doing. Don't get hard on yourself. If you're having trouble figuring it out, stop trading while you figure it out, right? And don't start with the whole damn thing. Pick an indicator and understand. Start to read it and then start incorporating other things. First thing you're going to want to understand, though, is expansion and contraction of volatility and how when the correlation breaks, what the price action is going to do. And obviously, our entropy indicator is just one of a kind. It's amazing. It's amazing. Yeah, we definitely try to push this thing down. There's just people taking profit, man. I don't blame them. I don't blame them. At the same time, people are pretty smart though, because I tell you what, right now, the shorts, they're falling off even more. They're not falling for it, right? Usually, you'll see some shorts piling on down here. This is a horrible area to short right now, right? Horrible. Not financial advice at all. It's just, hello, you're down here on the daily at the 95.4. I mean, you do not want to be short in this area. This is why people short bottoms and buy tops right here, because they don't understand distribution levels, which, and I've had people recently going, this shit's unheard of, right? It's like they're seeing aliens for the first time, right? Or Bigfoot. Are you Bigfoot? It's like, no, I'm not Bigfoot. It's because it's not shared with retail traders. They don't want retail traders knowing about all this shit, right? I'm sure there's probably a hit out on me. Nah, we're not that big. But they do not like people sharing this stuff. That's why go online and try to search a bunch of stuff. You'll find some things, but you're not going to find anybody going, just going off on volatility, probability, and statistics trading. They don't want people to do it, right? They would rather push the TA on the traditional TA on people, so they have an endless supply of people on the other side of their trades. And so what do we do at Alpha Trading? We build indicators that recognize what these algos are doing and where these distribution levels are. And then because they have happily gathered all these folks to be on the other side of their trades, hell, let's trade with the smart money, right? Let's do what they're doing, because there's plenty of people over there, right? Plenty of people over there. It's nice getting that profit from those folks trading TA. And I'm sure there's a lot crying. I mean, it is a fact that a lot of people lost a lot of money on the last bull run because they're trying to be cute, over-leveraging themselves and shit, and they just get liquidated the whole way up on a damn bull run. Why didn't you just hold? For Christ's sake, if you don't know what you're doing, just hold. Just hold spot. Watch your account grow over time. Then when you see a macro trend change because of maybe some macro divergence somewhere, take your profit. Take your profit. But yeah, the algos are going to defend this 95.4, right? For this daily to close outside here, there's only a 4.6% chance. But that being said, there is still a 4.6% chance. It's not like it's, okay, there's a 0% chance this happens. No. And so yesterday, the high, what created? Where did people take profit? Where did the algos? And it was literally third to the last 4-hour candle close yesterday. What happened? We opened up this new 4-hour candle, right? Here's the 68.3% Laplace distribution range. This thing made a 99.7% Laplace distribution range move on that 4-hour candle. That is massive. It doesn't happen often because that is huge. That's a huge distribution, right? I mean, that thing is flared out big time. That's where it all started. Relief pump. So yeah. Even on this 4-hour candle, we got a 95.4. That was where that thing rejected, right? On the 4-hour candle, there was a 68.3. There was the 95.4. Shit, it was on its way to the third standard deviation normal distribution. That doesn't happen very often on a 4-hour candle. Then we rejected. Opened up the new 4-hour candle. Look where it rejected from on that little pull up, right? Right at the center of the daily volatility range. Rejected from there. Now all these 15-minute candles have been closing on the top side of the 95.4 Laplace in the second standard deviation normal distribution. This is why we use this chart and use it religiously. As MJ would say, for Christ's sakes, Bilbo, we could just trade that chart alone. Shh. No, you can't. Throw a returns oscillator on the bottom down here and you're on the way though. But I got to see volatility, right? Because it's gold down here on the 5-minute when you're reading these AVRs, knowing where to take profit when you're reading these the Wolfsbane indicator, the historical volatility, the divergence, where are these power means, right? Because that's how it works too, right? You'll reject off these power means. So right now, trust me, we get up here and we start closing 15-minute candles, quite a few above these power means. Oh, whoops, let me go back to 15. That's 5. It works there too. But look what's been dictating this price. Hell, we haven't even got back up to the power means on the 15. Y'all better hope we get through these. Because right now, this log MA has been rejecting all the price action. We reject off these power means coming in a new day. You know, you guys have all seen this before. Rejection, down another leg. Goes sideways until those power means catch up. Then it rejects again. Yeah, exactly. Damn, MJ. You got to get me straight, man. Taking the Lord's name in vain. I try not to. Let's see. Yeah, you say meet up. You say meet up. But if you come, there's going to be a lot of campfire. And there's going to be a lot of hallucinogenics. And we'll stare at these charts. Oh, boy. I'm just kidding, YouTube. We don't do that stuff. Never. Only at Grateful Dead shows would I ever do that kind of stuff. Yeah, brother. There we go. Yeah, scary. We'll get along good. We'll sit around the campfire and stare at the fire elementals. Have a good old time. I've actually got a Bigfoot, a big black metal cutout of Bigfoot. It's like my mom took the nieces down there to see the property. And they got scared shitless. They thought it was real. They were running. There's a Bigfoot. Oh boy. Yeah, it's a beautiful little property. I'm pretty stoked. Let's see here. We can hunt turkey. Bring your bows. Bring your 410. Blow some turkeys up. Pew pew. Till deer season kicks off. You guys can help me load up my chest freezers. Okay. Yeah, it's probably about to wrap it up. I'm way off the reservation at this point. But we learned a lot today. right? We learned a lot about volatility, probability, statistics. We learned a lot about a possible meetup and how kooky it would be. And yeah, I was talking to somebody earlier too about NFTs. Just makes sense, right? If you look at the oh my god, I'm having brain lock right now. The staking, your staking percentages, like say with Cardano, it's kind of a no-brainer, right? To maybe take some of the Cardano you hold, get into some Cardano NFTs, right? Because if some of them pop, if some of them do pop, and that Cardano heads back to your wallet, guarantee you're probably going to have more Cardano than you would off just that Cardano sitting in your wallet staking. So that's kind of what I'm looking at with Solana and Cardano. That's why, I've recently got in, probably dove in head first. I hit my head on the bottom. I dove into the shallow end and hit my head. So now I'm like, I buy too many probably, but it's okay. MJ's in charge of me. He'll keep me. He's got a lock on my wallet. Yeah, I try to be. Solana too now. I mean, I really like Solana. And hell, it's holding real strong. To be honest, Solana, man. I should have, the money I took to put in Cardano, I should have split it down the middle. I would have got in Solana at about $22, right? Instead, I was in 88, about 80 cents. Look at the difference, 22 to 180, 80 cents to well, got up to $3, but yeah, Solana definitely had way bigger percentages. But all that being said, if you're watching this on YouTube for the first time, you're probably like, what the hell just happened? These guys are crazy. Yes, we are, but we do trade volatility, probability, and statistics, and we do it well, and we will teach you to do the same. The link to our Discord's in the description. Check out the shop channel when you come in, and you'll see the two different tiers of the Discord. That being said, thanks guys for watching live in the Discord, and I will see you tomorrow, Friday, 2 p.m. Pacific Standard Time, same place. Later.